So it doesn't take a genius or technical expert to notice AMC stock was down 13.5% in regular trading on Friday, down 1% in after hours. If you guys have watched the last couple of channels, I specifically said some of the guys that are shorting AMC, that are selling AMC right now, they're not the sharpest crayons in the crayon box. Okay, let's be honest there. That is to your benefit. Now, let's break down what's going on with AMC, what could be coming next, and all of the data you need to know. Pretty straightforward, pretty simple. Let's start, first things first, with hitting the like button and subscribing to the channel. Also, if you know someone that invests in AMC, they probably should see this video as well. So just share this video with them or show them or what have you. So, number one thing that happened on Friday, I guess it's a combination of a couple different things. So, 5-year inflation expectations, you were expecting 2.7%. They came in at 3%, higher than expectations. Your 5-year inflation expectations jumping is not great. Your 1-year inflation expectations, you were expecting 3.1%. They came in at 3.8%. This should have caused bond yields to go higher, if not stay pretty flat or go up a little bit. You shouldn't see bond yields fall. What actually happened on Friday is bond yields nosedived, okay? They did not fall. They nosedived, okay? 30-year treasury yields down about 11.5 basis points. 10-year treasury yields were down about 9.5 basis points. Why? Pretty simple. This Israel conflict is about to enter the next stage. Investors, they're fearful. They are very, very fearful. They want to own treasuries. They want to own gold. Gold, specifically, guys, gold, GLD, was up 3.21% in regular trading, up 0.26% in after hours. Gold gapped up higher. Now, this period was the banking crisis back in March. You did not see a 3% day during all of this for gold. The last time that I can see you seen a 3% day on gold was, back here in March of 2022, you were up 2.74%. Let's see. When is the last time you had a 3% day on gold? I can't even find one. Okay? It's been a long time. Because gold is seen as a safety asset. So when there's fear out there, when there's real fear out there, when people are, wanting safety, they buy themselves some GLD. They buy themselves some gold. And the fear on Friday was unprecedented. You have not seen fear, like I'm saying here, like this in a very long time. This has to do with the Israeli-Hamas conflict. But it's deeper than that. The fear comes from the possibility this spreads into an even larger problem, potentially even World War III. Ray Dalio came out on Friday, and he says there's a 50% chance that we go into World War III. This could include China. This could include the U.S. because of this conflict and how it could spread to other nations. Now, you, generally speaking, want to follow the money. Regardless of what stocks do, follow the money. I've been saying this in videos here on this channel. You've seen gold go up recently from the lows that you hit back here in early October. You've seen gold have a couple strong days, a couple smaller down days. But Friday was really a standout one. Okay, maybe it's Ray Dalio's comments. Maybe it's someone somewhere knows something. As you guys know, a lot of your billionaires, your big money, they tend to get information before we do as retail investors or even as the markets as a broader whole. When the money goes into gold, the most money you've seen in years, you definitely want to pay attention. Now, specifically, this conflict has a broader implication for the U.S. economy. Imagine it like this. About 30% of the world's oil travels through Iranian water space, or pretty close to, I believe, international waters, but it's within Iran's kind of blockage point. It's a strait, right? A body of water in between two countries. Well, if we got into a situation with Iran, the markets are saying, hey, Iran could just cut off the flow of oil. They could reduce it. Imagine if 30% of the world's oil was no longer here. $5, $6, $7 gallons of gas is going to look cheap. You're talking California, probably $20, $25 a gallon. Here in Michigan, I would imagine $10 to $15 a gallon. Down south, it might be a little bit cheaper, but you get the idea. You would basically stop the economy. You would almost instantaneously go into a contraction that would pale in comparison to the Rona. And that was a pullback in GDP of about 30%. Obviously, the price in energy usually works in a lag, so it would take a little bit of time, but you could be looking at oil at $200, $300, $400, $500 a barrel, at least temporarily, depending how long that situation were to last. That's why the markets are fearful. You haven't seen a conflict in a very long time that had real financial implications for the U.S. economy, like this one could. Now, we have the latest developments here, but I wanted to start that video off with that. Because AMC stock down 13%. Well, sure, hedge funds institutions are not exactly the brightest crayons in the crayon box. They think risk off market, sure, AMC, even though AMC is trading lower than where it was back in January of 2021 when everyone thought AMC was going bankrupt. The logic is flawed, okay? But that's where the logic is coming from. It's due to this crisis situation. So we have a couple different things to really go over here in this video. Maybe we should start with Ray Dalio and just what he said. So Ray Dalio says there's now a 50% chance of world war as the Israel-Hamas conflict threatens to spread, hedge fund legend Ray Dalio says. And he goes on to say that this 50% chance of a world war would include China and the US. The problem, really what you need to be watching is this incursion into Gaza. There's going to be a lot of loss of life. Let's say it how it is. A lot of people are not evacuating. A lot of people don't have a place to go. Israel has to do what they have to do. Regardless of what side you're on, I could really care less. That's a simple fact of the matter. There's going to be a lot of loss of life on both sides. That is not something the global world is going to like all too much. It's going to raise tensions. One miscalculation here, one miscalculation there. Boom. Now you're in a huge conflict. That's essentially what Ray Dalio is saying. And again, the financial implications of this could be massive, could be colossal. Okay, so that's in nobody's best interest. Now, if we take a live look at the updated situation, what's going on here with this conflict, I do want to start here. So this article from CNBC says, says Iran-backed Hezbollah joining Israel-Hamas conflict would be a game changer, according to this Middle East expert. Hezbollah operates as both a political party and paramilitary group and is designated by the U.S. as a terrorist organization. It holds a great deal of power in Lebanon in the form of its Shiite political party, which holds 62 seats in the country's parliament alongside its Iran-backed proxy militant unit. Lebanon is facing its worst economic crisis in history with triple-digit inflation and a currency that has lost more than 90% of its value since the onset of an economic crisis in 2019. Almost 3/4 of the Lebanese people live below the poverty line. Now, Hezbollah, directly backed by Iran, is a much larger problem than the group that Israel is fighting right now in the south. They have about 140,000 rockets supplied directly from Iran that are pointed at Israel. Now, what is Hezbollah saying now? Okay. So, on Friday, Hezbollah's deputy chief, Naim Qassem, said his party was, quote, fully ready to contribute to the fighting, according to Reuters. The behind-the-scenes calls with us by great powers, Arab countries, envoys of the United Nations, directly and indirectly telling us to not interfere, will have no effect, he said at a rally, according to a translation by the news agency. Basically saying, we're going to do what we want to do, regardless of who says to do what. That doesn't necessarily sound like they want to stay out of this conflict. Now, Hezbollah says they do have to take into consideration public opinion in Lebanon. That's why this is such a potential negative, because public opinion is not very high for both sides right now. You know, there's a lot of people that are divided on this conflict, but Arab nations, people, they definitely don't like what's going on here. That's only with 1,500 or so fatalities in Palestine, in the Gaza Strip, in the West Bank. Imagine if you're seeing 10, 20,000. That's where you could get more people involved, more countries and organizations involved. That would not be great. Okay. Now, Israel just gave the hospital, which they had previously given them a 2-hour notice to get out of the country. Well, basically get to the south. They're now giving them about a 12-hour deadline, and that deadline has already come and went. So it looks like at any time you could see a larger conflict breaking out here. That's not exactly great in regards to even our equity markets. The IDF says it's, quote, preparing to extend the attack on Gaza. Quote, preparing to implement a wide range of offensive operation plans, which include, among other things, an integrated and coordinated attack from the air, sea, and land, according to the statement. They have, quote, prepared to increase readiness for the next stage of the war with an emphasis on a significant ground operation. Now, Benjamin Netanyahu tells Israeli military members the next stage is coming. He asked them, you ready for the next stage? I think this could be coming in the next 12 or so hours, probably by Monday morning. And depending how countries react to this, that's what is really going to drive this market. After all, if you follow the money, people are very, very fearful. Now, if this situation were to actually break out into a situation where 30% of the oil for the globe was restricted in some capacity or another by Iran, that's probably the first thing they would do, then you could see new lows in the market. And I know that sounds crazy. You could see your 2022 lows, you could fall more than that. On the NASDAQ, that would be something around 31% to get back to the lows. You could easily fall under that. Easily, if you were to see 30% of the oil supply be cut off. That's why right now is a very dangerous time for the markets. That's why hedge funds, institutions, even as flawed as they are, and again, not the sharpest crayons in the crayon box, they're going out and they're shorting AMC because they figure, hey, we might as well short AMC if this situation gets worse. Well, we're going to make some money. Well, it's not going to pay out the way that they would expect. The broader markets could fall a lot more than AMC at this point, in my personal opinion. So I will keep you guys up to date on the situation, essentially what is going on here. Now, with AMC in particular, like we said, that is basically what caused that down move on Friday. This was actually the first day of the Taylor Swift movie being played in theaters. So very strange why AMC stock was down 13%. Some of it, as I reported previously, could have to do with the new US SEC rules to shine a light on short selling. Basically, your short positions are going to be exposed. You can no longer hide between the non-transparency of the markets, meaning that if you're a hedge fund, you have to report your calls, your puts, as well as your long shares. They never had to report their short positions. That's just very flawed in my personal opinion. Now, we're going to get that information in more so a real time within a day or two. And then within the course of 20 days after a hedge fund takes down a short position, we'll know what collateral is used to back that short position. We'll know what kind of, down payment potentially is put on that short position. We'll know a lot of information. So we'll maybe finally be able to see what's actually going on under the surface. Now, in other news, it does look like B. Riley Securities lifted their Q3 2023 earnings estimates for AMC Entertainment in a new report issued on Wednesday, October 11th. B. Riley Security analyst Eric Wold now expects the company will post earnings of 32 cents a share for the quarter, up from their previous estimate of 63 cents. I believe this is still negative. It'd be negative 32 cents. We'll have to wait and see. I don't even know, what to expect as far as the earnings. I don't think that really matters right now. Let's be honest here. With this situation going on in the Middle East, I think this takes precedent over AMC earnings. I think it takes precedent above most other things. And it really, like you seen on Friday, is going to drive what happens in the markets as well as AMC. So let's go ahead and give you guys a brief rundown of the Ortex data. Then we'll go ahead and wrap this up. I think we talked enough of your ears off for right now. We'll be back later on today to give you guys another update on what's going on with this Israel situation, how this could affect AMC stock, and really what I expect from here. Take a look at the technicals, all of that. Things that we didn't really get into here in this video. Now, short score 58, $170.45 million worth of short positions currently in AMC stock. Estimated short interest of free flow sitting at about 8%. You guys got to take these numbers with a truckload of salt. They're obviously not true. Free flow out on loan at 11.35%. Shares out on loan 22.44 million. Days to cover 1.3. Cost to borrow 1.94%. And utilization of 47.05%. Again, this Middle East situation, that's the thing that is really moving AMC stock right now. And on top of that, the SEC situation, you probably have a lot of people just trying to get into those short positions before this data becomes public. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.